Hello everybody, back with Daniel Research here, and today we're gonna cover what happened last week with the CPI and PPI data for just a little bit because it was really no big surprise there. And then we're gonna go into the big catalyst for this week, which is the FOMC meeting and the Federal Reserve statement that's gonna come out on Wednesday this week. All right, so first let's go with the CPI. Right, we had the CPI month over month and year over year coming in line with the expectations. However, the core CPI actually came in higher, right? So the core CPI is the inflation excluding food and energy, since those are very volatile, and for me it's actually a better metric than the normal CPI, right? So let's just dig a little bit deeper into the data here. This is just a basic overview. I just got this from the report itself, and I've highlighted the items that are actually beat the expectations and actually have the upward direction of the inflation figure. All right, so here we have food away from home, right? So it came in a little bit higher, and food at home, however, it did come down, right? But it's important to say that even though it's coming down, those are actually high, right? So it's kind of the same as last month if you average it down. So it's like 2 times more than the Fed mandate. So it's like 2 times more expensive than the Fed would like it to be. In regards to food, which is not great, right? Then we look at all items less food and energy. That's pretty much the core CPI. But the important thing here is actually the energy services, like the energy, electricity, utilities. So those have come down significantly, and you might ask yourself why that is. Well, that is because the oil has been coming down quite a bit. As I've already talked in the past videos, we've actually had a big downward momentum on oil, and this could be due to low demand and the consumer being not as strong as before. So this can actually explain why the CPI is coming down partially, right? So then, if you get rid of the energy sector, you actually see that we have quite a upward momentum in shelter inflation. It's like 3 times the Fed mandate right here. See, shelter. So even though it's just 0.1 more than before, it's still a lot, right? It's like 3 times more than the Fed would like it to be, right? And the medical care, commodities, services, transportation, those are also up. Right? So not that great, but if you look at it overall, then it's not that bad really. So that's why the market didn't have such a big downward reaction to that. Actually, the market rallied the past few days, right? But we can actually contribute that to the incoming Fed decision. So the market's not that concerned with the inflation data as much as it's concerned about the Fed decision. Right, okay, and then we look at the PPI. It was actually a beat, right? You can see it was a beat, not a big of a beat, but still it was a beat. And this is not great because the PPI is like the producer price inflation, which actually is what the producers of the goods that we are consuming are expecting, not expecting, but are experiencing. So essentially, those prices that the producers are experiencing, they're gonna be felt by the consumers down the line. Because if the producers are getting more inflation, their margins are going down, and they have to pump up the prices eventually, right? But then, of course, that could change because this week we have the Fed decision on Wednesday, right? And I was thinking whether I should do 2 videos, one for the CPI and PPI and what happened last week, and with the European Central Bank, or just go in one video, and I've decided to go with one video, right? So the Fed decision this week on Wednesday. Okay, so now we're wondering whether we're gonna get 0.25% or 50%, 0.50% cut. Okay, so the worry here is that if they do 50%, 0.50%, that's gonna signal to the market that they're worried, and that's not good. Because if they're signaling to the market that they're worried about the economy, then the market's gonna price that, because the market's always pricing into the future. And if they price 0.25%, then that's not good as well, because the Fed is quite late with this. Okay, so I think the labor market is going into the wrong direction. So now the big thing is they should balance out the labor economy with the monetary policy, right? So those two, in order to bring down inflation without causing a recession, those two are very important, right? But essentially, the only way to avoid a recession is if the Fed can actually convince the markets that although they're expecting some hurdles down the line, they're very confident they can do it. You know, they can bring it down. So that's the only way I think we can avoid a recession, actually. Because if we think about it, if one company starts firing people, then all of the other companies are going to start firing people, right? We already talked about this in the last video, but now the thing is, if the market goes down, if we see a market correction, then we're probably going to see the need of companies to fire people, and that's going to be a self-fulfilling prophecy, because once company starts firing, then all of the rest are going to follow. So here the thing is, one market there's a good phrase that when we're one market correction away from a recession, right? So if we see the market correction as I'm expecting, I'm not predicting, I'm expecting, right? We're gonna see what the FOMC says on Wednesday, but companies are gonna be cornered to fire people down the line if we see a market correction. However, if they manage to convince the markets that everything is going to be fine, they got it under control, and if the market believes them, right, then we can actually see the market sustain its move, and that's going to be positive for the economy in the sense of companies having good enough stock prices in order for them to not have to fire people, right? But then again, we also have the wealth effect, right? We're gonna avoid the recession if the stock market's up, potentially, right? It's not like there's never gonna be a recession. I'm still thinking that there's gonna be one pretty soon, but the wealth effect. The thing is, the wealth effect also contributes to inflation, right? So if they start cutting rates and the markets continue to go up, then that's going to be inflationary, right? So it's kind of a very interesting place to be, and it's very, very hard to actually be in the place of the Fed, right? I don't want to be in the place. All right, but now I just want to show you something very, very interesting from 2007. Y'all know that 2008, the big financial crisis, but what happened before that? Okay, this is a CNN Money article from September the 18th of 07. All right, let's start reading here to see what's up with this. The Federal Reserve cut the target on a key short-term interest rate by 0.5 percentage point. All right, so this is the same meeting that we're gonna have now. Here they cut by 0.5%. Right, and what did they say? They are concerned by the mortgage meltdown. Right? Essentially, they were concerned about the economy. Okay, and look at this as well right here. The only question was whether the Fed would lower the federal funds rate by 25 basis points or 50 basis points. Sounds similar? Right now we're about 50-50%, 50-50 whether the Fed's gonna cut by 25 or 50 basis points. So it was kind of the same back in the day, right? And here you can see that the investors were also worried about this move. Right here, some investor had thought that would take a more cautious approach and not cut rates by such a large margin, because half a point could signal the Fed was acting up out of desperation to save the economy, right? So what happened after this cut? This is the cut in 07, right here, 18th of September. Initially, a rally. Right? But then, what happened then? Right? If you look at it this way, okay, like this, on a weekly chart, they cut here. What happened after? Right? We got a big financial crisis, a recession. Right? This is just a very interesting observation that I just had, and I decided to share it with you guys. So it's going to be very interesting. We're going to see what is going to happen, what the Fed's going to say, and I'm going to be there for you to break it down. Perhaps I might even do one more video before the decision, or not. We shall see. But yeah, essentially this is it. Like, subscribe, comment on the video. Let me know what you think, and see you guys in the next one. All right?